Welcome back. Well, now let's contrast the ERISA disability policy with the individual disability policy. There are six differences. In a private individual disability policy, you can customize that policy to you, and the terms of the policy can't change unless you reach an agreement with the carrier about changing the terms of the policy by adding riders or taking off limits on medical conditions or other limitations. So it's customized to you. The second thing is that the policy can't be canceled unless, of course, you fail to pay the premiums on time. Number three, many individual disability policies provide for an increase in benefits. So, for example, you can begin coverage at $6,000 per month and increase the amount of the payment, generally $500 per year over a course of time, and it can be as long as 5 years. Now, that just doesn't happen in a group disability policy. Your benefits are generally fixed. What are the three other differences between a group disability policy and an individual disability policy? Well, number four is that the policy is portable. So that means that your individual disability policy goes with you throughout your life and your career, so long as you pay the premium. Number five, individual disability policies are governed by state law. If your IDI claim is denied for some reason, you're going to be able to file a lawsuit in state court, and you're going to be able to claim bad faith damages, punitive damages, and even attorney's fees. And you'll have the right to present any new evidence that's been developed over time, and you have the right to present that to a jury. That's a significant difference as compared to ERISA. And number six, and in my view, the most important, is that there's no get out of jail free card. Because if for some reason your claim is denied, it's a breach of contract case. A breach of contract is basically you're saying to the court that you entered into a contract with a disability insurance company to pay your benefits, and that the disability insurance carrier breached that contract and the duty that they owe to you to pay your benefits. That's completely different than what you're suing for, or the theory of your suit in an ERISA disability claim. So what's the summary here? The summary is that ERISA has limited benefits versus individual disability policies where your benefits are tailored to your financial needs. ERISA has limited coverage for mental nervous conditions and even subjective medical conditions like migraines or fibromyalgia. And you rarely see that in an IDI policy. ERISA has offsets for other income, such as Social Security, personal injury settlements, you name it, but rarely do you see those offsets in IDI policies. Now, the ERISA policy will generally end when your employment ends, but the IDI policy goes with you for life so long as you pay the premium. ERISA is governed by that federal law, and it's not a friendly place. On the other hand, IDI claims are governed by state law, and the threat of a bad faith award and attorney's fees give the carriers an incentive to do right and pay benefits. And in an ERISA case, we're going to be claiming a breach of fiduciary duty, where the carrier has the right to interpret the terms of the policy and decide if you are disabled or not. And they're protected by that get out of jail free card, that arbitrary and capricious clause. On the other hand, in an IDI policy, if you don't get what they agreed to pay you, you can sue the disability carrier under a breach of contract cause of action. And ultimately, a jury can decide what you're entitled to. I like that a whole lot better than ERISA. I do know, as my dad told me, and I know because I pay my own premium, an individual disability policy can be expensive. And that's why, unfortunately, for many, the only way you can get disability coverage is through a group disability policy. But I want you to disregard the hype from your HR department about your disability benefits and the coverage that they have, because most often the HR people don't really know what's in that policy. And they're going to tout it as a great benefit that the employer is providing to you. So just remember that it can't be a great deal given the small amount of premium that you pay. And if that's all you can afford, that's no problem. You just need to know that when you really have to count on it, if you become disabled, your primary ultimate source of income is probably not going to be your disability insurance, but rather Social Security disability benefits if you qualify for those benefits. So what policy do you have? An ERISA policy, an IDI policy, or both? Which policy do you have? The answer can make all the difference. Perhaps it's time for you to change your insurance or to get additional insurance so that you really have peace of mind and financial security. In the next segment, I'm going to do some myth busting. And the myth that we're going to be busting is you're on a level playing field with a disability insurance carrier. Stay tuned. Welcome back. Now I'm going to do myth busting. And the myth that we're going to talk about today is the myth that you are on a level playing field with the disability insurance carrier. Now, my job is to be that myth buster so you understand your ERISA and disability insurance policy, the claims process, and the games that disability carriers play. And you might have heard from neighbors and friends and lawyers and even insurance agents myths about disability insurance policies and benefits. Unfortunately, these myths are generally not true. So my job, as I said, is to be a myth buster. The truth is that you are not on a level playing field with a disability insurance carrier. And numerous federal judges have acknowledged that you are not on that level playing field during the claims process, and that they, the judge, are handicapped from awarding benefits by that blasted discretionary clause in the disability insurance policy. Now, my all-time favorite ERISA disability policy is Zaney versus Kellogg and Metropolitan Life. Yes, the policyholder's name was Zaney. There are so many favorite quotes that I have from this case, and I'm going to share them with you today because I think Judge Enslin gives you a view from the bench of how frustrating ERISA disability claims can be for judges. And Judge Enslin said that Metropolitan Life had arrived at a formula for operating a profitable insurance business. It doesn't allow piddling things like the facts to intrude in its employee benefit claims decision. So let's talk about Zaney. Zaney was an associate director at Kellogg, the cereal company in Michigan. She claimed that she was disabled because of a number of suicide attempts, self-mutilation, and depression. And unfortunately, this was secondary to a history of child abuse and sexual abuse when she was a child, a teenager, and continuing into her years as a young adult. When she became disabled and unable to work, MetLife paid her benefits. But as always, the definition of disability changed from own occupation to any occupation. And at that point in time, at her therapist's suggestion, she was doing volunteer work for a company operated by her therapist called the Sparrows. Now, the judge pointed out that this was probably not a wise thing, and worse yet, she had become a passive investor in this business, probably a violation of her relationship with therapist. But in any event, that's the facts as they existed at the time. MetLife looked at this case to see whether or not they were going to continue the payment of benefits under the any occupation definition of disability. So at that point in time, she was doing the volunteer work, and she couldn't follow a schedule. She couldn't show up on time, and she was unable to meet the production requirements. She was volunteering maybe 6 to 12 hours per week. She'd even helped design a website, and the judge looked at it and said, look, this isn't professional in character or quality, and is certainly not designed to attract prospective clients to the Sparrows. And as I said, she had passively invested money in this with the hope that it would become a viable psychiatric treatment center and that she would play an important role. Now, her view of her role in this company, what she was contributing to, and its possibilities were ultimately considered by the judge to be a pipe dream, because it just really wasn't realistic. But MetLife, as always, had their vocational rehabilitation counselor review the file. And the vocational counselor ignored the reams of medical evidence that she couldn't work in any capacity. And in fact, suggested that her volunteer work at the Sparrows would in fact help the Sparrows become a viable business opportunity, even though they had really no patients and no marketing. So, of course, based on the vocational evaluator's analysis of the great volunteer opportunities being the equivalent of work, the claim was denied on the basis that that volunteer work constituted self-employment. And of course, they threw in the gratuitous argument that there wasn't sufficient documentation of a disabling psychiatric illness. MetLife never even bothered to have an independent medical evaluation. They really relied on their vocational counselor, who was sort of acting not only as a VE, but as a medical provider determining Zany's restrictions and limitations. So, of course, Zany appealed, and MetLife upheld the appeal in part on the basis that her claim was inconsistent with her ability to write and compose an appeal letter. Really? So the judge went off on MetLife saying, look, if this is a regular basis for denial by MetLife, then presumably there's a 100% formula for denied claims, because it could deny a badly drafted letter as ill-explained and deny good letters as evidence of a lack of disability. The judge said, this is preposterous. The insurance company doesn't know who prepared these letters. And in fact, in this case, Zany had regularly had others prepare correspondence on her behalf. So the judge said, look, this record is an open indictment of MetLife's practices in treatment of the mentally ill and long-term disability benefits. In this case, MetLife regularly reviewed her file with an open intention to deny benefits despite profound and compelling evidence of serious and prolonged mental illness. MetLife relied solely, in the judge's words, on a search and destroy mission by the VE who acted like a psychiatrist in determining Zany's psychiatric restrictions, improperly concluding that the volunteer work was the equivalent of a business enterprise and that she was capable of acting as a director or an executive. Ensslin even cited Eugene O'Neill's play, The Iceman Cometh, in his denial, saying that the whole business venture at Sparrows was a pipe dream and that any passive investment did not equate to an inability to perform an occupation. The truth is, according to the judge, and based on my experience, you're never on a level playing field in an ERISA disability case. Next week, I'm going to take on myth 3. If your employer says that you're unable to do your job, you're going to win your case. In our next segment, I'm going to tell you the story of the anatomy of a Reliance Standard claim denial and how a federal judge kept an airline pilot's own occupation benefits for hepatitis C from crashing and burning. Stay tuned.